Tuesday, November 9th, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at what is, in my opinion, one of the most disruptive, destructive, dishonest institutions that we've had for the last 300 years plus, and that is the institution of a central bank. And I'm going to try to convince you why having a central bank is actually a deterrent to having sound banking, and that with central banks, banks will never be safe, especially those that are called too big to fail. So before I start, I'd like to give you a simple analogy for those of you who are not into banking, who haven't been with this channel for that long or don't know about central banking. But the analogy is basically, let's say you get married, you have children, you've got a family, and then you help your children grow up, you provide for them, they go to school, they get older and they leave home, and then the hope, of course, is that they will be able to fend for themselves and not have to come back to you and your wife or your husband for help, that they become self-reliant, and that they can on their own also start their own families. And you might be asking, what's that got to do with central banking? Well, central banking is basically the private banks always having mom and dad in order to cover up for their mistakes and bail them out. That's what a central bank is. And I think there is a man that needs to be blamed for this idea that the purpose of central banks is to bail out the banks. And there's a note saying that it says the road to hell is paved with good intentions. And I think this man had good intentions, but I've looked a little further into him. His name is Walter Bagehot. And Walter Bagehot, he was born in 1826 and he died in 1877, so he died quite young. Says was a British journalist, businessman, and essayist who wrote extensively about government, economics, literature, and race. And yes, his father was a banker, so he was from a family of bankers. It says Thomas Watson Bagehot, his father, was managing director and vice chairman of Stuckey's Bank. So this is what he said about banking and central banking. And I'll read from Wikipedia here. It says, in Lombard Street, a description of the money market, 1873, Bagehot seeks to explain the world of finance and banking. His observations on finance are often cited by central bankers. Most recently, in the wake of the global financial crisis, which began in 2007, of particular importance is Bagehot's dictum that in times of financial crisis, central banks should lend freely to solvent depository institutions, yet only against sound collateral and at interest rates high enough to dissuade those borrowers that are not genuinely in need. So that's what Bagehot's dictum is. Did they really follow his dictum? I would say not. Interest rates were really low and they helped everyone. They helped all of the banking institutions. And all the stuff we have, all the regulation, all the Basel I, Basel II, Basel III, we have prudential authority, regulatory authority in the UK. It's the Bank of England regulating banks, the FCA. All those would be unnecessary in a world where you don't have central banks. And why are central banks so disruptive, so dishonest, and so unfair, I think, for the general public? Well, because it gives a small group of men and women the power through legislation to create reserves, or money, if you want to call it, out of thin air, while the rest of the population, they need to do real work to earn money. Central bankers and bankers don't. And the central banks and the banks are tightly connected. They're one and the same. And that's one of the reasons why this institution is such a bad idea. And it's one of the reasons why, of course, it's one of the planks of the Communist Manifesto, centralized credit and banking. Yes, Bagehot's idea wasn't bad, but you have to look at where he's coming from. His family is a family of bankers. So some of you might be saying, well, if they didn't bail out the banks in '08, the whole system would have collapsed. The economy would have collapsed. Yeah, but the reason they had to do it is because the central bankers have been helping out, especially under Greenspan. They've been helping out the banks. They helped out bail out LTCM, because LTCM was probably going to bring down some Wall Street banks back in 1998. My argument is that banks should be like any other business. They should be able to fend for themselves. Yes, they should be there trying to make a profit, because what's the point of running a business, right, without a profit? But what we have now, especially with derivatives, which are balance sheet leverage bets, which banks love to take because they make billions of dollars from it. We have a system that is completely gone out of control. And that's why we still have zero rates. That's why we have QE. It's not because of the economy. It's because of the banks, and the banks have become such an important part of the economy as well, because our economies have been financialized, that the Federal Reserve needs to keep the banks whole. And if you don't believe me, there is a list of systematically important banks. This is just a euphemism, an excuse to keep these banks alive. And they've become so big that if one of them fails, all of them fail, and the whole system fails. And that probably would be a good thing, but we wouldn't have this if we didn't have a system, if we just had free banking. And I think Mr. Bagehot, he's got a lot to answer for, because his descendants, in terms of central banking and bankers, they've followed his dictum. They think it's normal. You know, you read the mainstream economists, the FT, Wall Street Journal, they accept it as this dictum as a truism. But it's more like the spoiled child, always getting bailed out by the parents. But now the child controls everything, and those are the too big to fail banks. And the central banks as well. And the central banks are totally there because of government. You couldn't have central banks without legislation, without legal tender laws as well. So here's a list of these banks, of these children that are still being bailed out by their parents, even though they've grown up. A list of global systematically important banks. We wouldn't need this list. We wouldn't need the BIS. We wouldn't need Basel 1, 2, or 3, or Basel 4. We wouldn't need the SEC. We wouldn't need anything. Consumers and people who use banks, who would use banks in a free system, they would do their homework. The market would tell them through signs like prices and interest rates which banks are the most dangerous. Nowadays, with regulators, people, it gives them like a false sense of security if they put their money with a bank that's, let's say, regulated by the FDIC, has insurance, right? you think, oh, it's a safe bank or a brokerage house that is regulated, whatever, right? So here's the list of these too big to fail. We've got 2020, that's the latest I've got here. You've got Citigroup, you got HSBC and JP Morgan. You've got Bank of America, Bank of China, Barclays, BNP Paribas, China Construction Bank, Deutsche Bank, ICBC, that's another Chinese, Mitsubishi Financial, that's Japanese. So it's all over the world. Agricultural Bank of China, Bank of New York Mellon, Credit Suisse, Goldman Sachs, Group BPCE, that's a French bank, Credit Agricole. So you get the gist. So these banks are protected, and that's why I say we need to learn about what central banking really is, that it's not a good thing, and that they need to be abolished. And I've had some of you ask me, because I've got the End the Fed mug, I've got the End the ECB or Ferme la BCE, and Die EZB herunterfahren, the German part, German translation, and French. And I've got Christine Lagarde behind bars. I've got the Bury the BOE mug. So now I've designed a Away with the RBA, which is the Reserve Bank of Australia mug. That was a suggestion from one of the viewers. That rhymes quite nicely, Away with the RBA. And for the BOJ, Bank of Japan, I think it was Rumpelstiltskin who asked about that. I did one, it says, Let the sun set on the BOJ. So there you go. If you're interested, if you want to fight the good fight and support this channel so we can keep informing the public that central banking is not a good thing. And with that, let's have a look at the central banking controlled markets, because they surely are controlled, these markets. It's 8:31 a.m. London time. We've got spot gold at 1822.70. That's down just over $1. Range has been 1829 to 1819 overnight range. Silver is down about 10 cents at 24.33. The range has been 24.50 to 24.25. I think the high yesterday was 24.52. I think key resistance is going to be around the 80 level, just above 80. If we're able to break that level in silver, that could be quite an explosive move up. And gold, of course, 1832.33. That's key resistance. We got pretty close overnight to that level. The Dow future is down 14. NASDAQ 100 future is down 2 points. And the S&P is basically unchanged. The FTSE is down about 5 points, just above 7,300. To the fiat currencies now. Sterling is unchanged, 135.68. The euro unchanged as well, 115.86. Dollars down 0.25% versus the yen at 112.96. Dollars unchanged versus the yuan at 639.15. Aussie dollar is unchanged, 74.20. The dollar is down slightly versus the loonie or Canadian dollar at 124.39. And the Kiwi dollar is down about 0.15% at 71.54. To the commodities, WTI crude is up 0.33%, 81.40. High-grade copper is unchanged at 4.39. Natural gas is down 0.75% at 5.40. And to finish off, the 10-year yield is down 1 basis point at 148. Today we've got US PPI coming out at 8:30 Eastern Time and 1:30 London time. So with that, I wish you all a great day. Take care. Bye.